HCL Tech has a larger proportion of intangible assets as high as 30,000 crores compared to just 10,000 crores for TCS, which is just one-third of HCL, for several strategic and structural reasons. Understanding book value and intangible assets is essential for anyone involved in financial analysis or business management. Book value is a fundamental financial term. It shows the net value of a company's assets, calculated by subtracting liabilities from total assets. Intangible assets are a crucial part of this value. They are not physical, but hold significant worth. Examples include patents, trademarks, and goodwill. HCL Tech, for instance, has many intangible assets. This abundance of intangible assets makes its book value appear high. On the other hand, TCS, another major company, has fewer intangible assets. This difference in intangible assets makes its book value distinct. Intangible assets are important because they reflect a company's potential for future growth and innovation. They show a company's potential for growth, innovation, and competitive advantage in the market. Let's delve deeper into why HCL Tech has more of these valuable intangible assets. HCL Tech's strategy focuses heavily on developing and acquiring intangible assets. This strategic focus is different from TCS, which may prioritize other aspects of business growth. We will explore how this strategic difference affects HCL's book value and overall market position. Each factor, from patents to brand reputation, adds to the company's value, making it a critical aspect of financial analysis and business strategy. HCL Tech buys many companies. This is called an acquisition strategy. Buying companies adds intangible assets. These include brand names and customer lists. HCL is aggressive in this approach. It buys companies to gain new technologies and skills. Other companies like TCS are less aggressive. They focus more on organic growth. This means growing from within. Because HCL buys many companies, it has more intangible assets. This affects its book value. Acquisitions also bring goodwill. Goodwill is an intangible asset. It comes from the reputation of the companies bought. HCL's acquisitions increase its goodwill. This makes its book value look higher. Acquiring companies is a key part of HCL's strategy. HCL Tech focuses on products and platforms. This means they develop software and tech services. These products are intangible assets. They are not physical like buildings or machinery. Developing these products adds to the book value. Products and platforms can be patented. Patents are also intangible assets. HCL invests in creating unique products. This investment increases intangible assets. TCS, on the other hand, focuses more on services. Services are less likely to be patented. Platforms are another focus for HCL. Platforms are tech solutions used by many clients. They are valuable, intangible assets. TCS's focus is different. HCL's strategy leads to a higher proportion of intangible assets. This raises its book value. HCL Tech invests heavily in R&D. Research and development create new technologies. These are intangible assets. R&D spending is turned into assets on the balance sheet. This is called capitalization. Capitalization of R&D increases book value. HCL's focus on R&D is strong. It spends a lot to innovate. TCS also invests in R&D, but in different ways. HCL's R&D leads to patents and new products. These are valuable, intangible assets. R&D investments are important. They create future growth for the company. HCL's high R&D spending adds to its intangible assets. This makes its book value look higher. Innovation is a key part of HCL's strategy. Client relationships and contracts, building value. HCL Tech values long-term client relationships. These relationships are intangible assets. They ensure ongoing revenue. Contracts with clients are also intangible assets. They have future economic value. Client relationships are built over time. HCL focuses on maintaining these. TCS has a similar approach but may account for them differently. Client relationships add to the book value. They show a stable future for the company. Contracts guarantee revenue streams. They are valuable, intangible assets. HCL's focus on long-term contracts adds to its book value. These contracts are important for financial stability. They increase the intangible assets reported by HCL. Goodwill from mergers and acquisitions, adding to intangible assets. Goodwill is a crucial component in the realm of intangible assets, especially when it comes to mergers and acquisitions. Goodwill is a major intangible asset. It represents the premium that companies pay over the fair value of the net identifiable assets of the acquired company. It comes from buying other companies. When a company acquires another, it often pays more than the market value of the tangible assets and liabilities. Goodwill reflects the reputation and customer loyalty of acquired companies. This includes brand recognition, customer relationships, and other non-quantifiable assets that contribute to the company's overall value. HCL Tech has high goodwill from its acquisitions. Over the years, HCL has strategically acquired several companies, enhancing its market position and expanding its customer base. When HCL buys a company, it often pays more than the physical assets are worth. This premium is justified by the expected future benefits from the acquisition. The extra amount is recorded as goodwill. This entry is crucial for financial reporting and provides insights into the company's acquisition strategy. This increases HCL's intangible assets. TCS's acquisitions are fewer. Unlike HCL, TCS has a more conservative acquisition strategy, resulting in lower recorded goodwill. TCS focuses more on organic growth and internal development rather than acquiring other companies. Goodwill shows the value of acquired companies' reputations. It is an indicator of the trust and loyalty that customers have towards the company. It is important for understanding book value. Goodwill plays a significant role in determining the overall book value of a company, which is essential for investors and stakeholders. HCL's strategy leads to higher goodwill. By focusing on strategic acquisitions, HCL enhances its market presence and competitive edge. This makes its book value appear inflated. While high goodwill can indicate strong acquisition strategies, it can also lead to concerns about overvaluation. Goodwill is a key part of HCL's assets. It reflects the company's growth strategy and its ability to integrate and leverage acquired businesses effectively. Differences in accounting policies. Reporting variations. Accounting policies impact how assets are reported. HCL Tech and TCS may use different policies. These policies affect the book value. HCL may capitalize more intangible assets. TCS might expense them instead. Capitalizing means adding to assets. Expensing means counting as costs. HCL's policies may increase reported intangible assets. This raises book value. TCS's policies might show fewer intangible assets. Differences in policies explain some variations. Accounting standards are important. They dictate how companies report assets. HCL's approach leads to higher intangible assets. This makes its book value higher. Understanding these policies helps explain the differences. Conclusion: HCL Tech has a higher proportion of intangible assets, which include things like intellectual property, brand value, and proprietary technologies. These assets are not physical but hold significant value. This affects its book value, making it appear higher than companies with fewer intangible assets. Several factors contribute to this, including HCL Tech's acquisition strategy, which often involves purchasing companies with valuable intangible assets. Their product focus on cutting-edge technology and software solutions also plays a role. Additionally, their significant investments in research and development ensure a continuous pipeline of innovative products and services, further enhancing their intangible asset base. HCL's strategy of acquiring companies with strong intangible assets leads to a higher proportion of these assets on their balance sheet. This makes its book value appear inflated when compared to companies with more tangible assets like machinery or real estate. Investors should understand these factors to make informed decisions. Recognizing the nature of HCL Tech's assets helps in assessing the true value of the company. These intangible assets, while not physical, show the potential for future growth and profitability. They are indicators of the company's ability to innovate and maintain competitive advantage. HCL's high book value signals a strong focus on innovation and client loyalty, which are crucial for long-term success in the tech industry. Understanding book value is important for investors, as it provides insight into the company's financial health and potential for future earnings. It shows the company's worth beyond just its physical assets, encompassing its intellectual property, brand strength, and customer relationships. HCL's approach creates a strong portfolio of intangible assets, which can be a significant driver of value in the technology sector. This is key for its financial health and future success, ensuring that HCL Tech remains a leader in innovation and client satisfaction. Stay tuned for more such contacts on our Value Investing channel. Happy investing!